Hello everyone. In the previous video, we have updated the cash book and we got the updated balance, and that is $225. And now in this video, we are going to see how to prepare bank reconciliation statement. So I will start with this updated balance of the cash book in the bank column. So I will write here balance as per cash book. And it is debit balance, so that I will mention here, and the amount is $225. And now my target is to reach the balance as per bank statement, and that is $400. So that should be my target. So balance as per bank statement, and it is credit balance. It's already given here, $400 credit balance. So here I should get answer $400. And to prepare this bank reconciliation statement, I will consider only those transactions which were already entered in cash book but not in the bank statement. So only those transactions will be considered here. So let's see. So here the first transaction is what? Check number 270 paid to Jagan, and the amount is $570. It means I gave this check to Jagan to make the payment of $570. So the day when I gave this check to Jagan, immediately I entered this in the cash book, and because of that, cash book balance gone down, decreased by how much? By $570. But what Jagan did, he didn't present the check in the bank to get the payment. So in bank statement, balance remained as it is. In cash book, balance already decreased, but in bank statement, there is no change with regard to this transaction. There is no change in the balance. So now my target is to reach the bank statement balance. And bank statement balance is here. And in cash book, we have already decreased. Already balance gone down. So from here to here, I have to reach. From this point to this point. So I have to go up. Up means increase. So I will add this figure. So I will write here check issued but not presented. But not presented for payment. And the amount is $570. This I will add back. Okay, this is the first transaction we have done. Now second, check number 873 received and banked from Sophia. So we got a check from Sophia and we put that check in the bank. So the day when I put this check in the bank, I entered in cash book, and due to that, what happened? The cash book balance has increased. The balance in cash book has increased because I got check from Sophia and I put that check in the bank. So receiving check is a good thing, and I put that check in the bank expecting that the money will be credited to my account. So what I did, I entered this check in my cash book and cash book balance increased. But that check amount is not yet credited to my account. So bank statement balance is as it is. There is no change in the bank statement balance. I put the check in bank, I increase the cash book balance, but this check amount is not yet credited to my account. So bank statement balance remain as it is. Whereas in cash book, I have increased my balance. So now my target is to reach the bank statement balance. So what I have to do, from this point to this point, I have to come. So I have to come down. So down means decrease. So I will subtract this figure. So minus 245. And I will write here check deposited but not yet credited. Credited means deposit in my account. Not yet credited. $245. I will decrease. because I have to go according to the bank statement, because my target is to reach the bank statement balance. So this is the second transaction. Now next, check number 272, drawings taken by Noori, $150. So I have drawn the check in order to withdraw the money from my account. So I entered this transaction in the cash book. So cash book balance, what happened? Decrease. The balance in the cash book has gone down. Decrease. But in bank statement there is no entry for this $150. So bank balance is as it is, no change. Whereas in cash book balance, I entered this transaction in the cash book. So cash book balance gone down by $150. But no entry in the bank statement. So bank statement balance is as it is. Whereas in cash book I reached at this point. Now my target is to reach the bank statement balance. So what I have to do, from this point I have to reach to this point. From this point to this point. So I have to go up. Up means increase. Increase how much? $150. So drawings not yet entered in the bank statement. So this is the third transaction. Or you can write amount withdrawn from bank but not yet debited. The bank has not decreased the balance of my bank statement. Now next, cash sales banked $300. I sold goods, I got the money, and that money I put in the bank and I entered in the cash book. So in cash book balance will increase. The cash book balance has gone up, increased. And whereas in bank statement there is no entry with regard to this 300. So in bank statement balance remain as it is, no change. Now my target is to reach this bank statement balance, whereas in cash book I have gone up. So to reach the target, bank statement balance is my target. So to reach this target I have to come down. In cash book I have reached here. So from this point to this point I have to come down. Come down means decrease. So this 300 I have to subtract. And I will write here cash sales not credited by the bank. Bank didn't put this money in the deposit column. So this 300 I have to subtract. Now let's see, did we reach the bank statement balance? So I will make sum of all this figure. So let's see if we got the bank statement balance or not. So this is what we got, $400, and that was the balance as per bank statement. So this is how we need to prepare the bank reconciliation statement. And while preparing bank reconciliation statement, we will consider only those transactions which were recorded in the cash book but not in the bank statement. So I hope you understood how to prepare the bank reconciliation statement.